Where leaders go, learning follows. Join an exceptional peer group to sharpen your leadership skills at Harvard Business School Executive Education. Both in-person and virtual options are available. To apply, visit hbs.me/go.
And good evening. We're doing it live right here in the 5 o'clock hour, Yabba Dabba Do time in Los Angeles. Mottek On Money, 5 nights a week for you, live on the air here in 790 KBC. Streaming live online worldwide at kbc.com. And yes, you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, all your favorite podcast platforms. Well, we have a winner in a well-fed rally, sending stocks higher, leading to a record-shattering day on Wall Street. The Dow ending up more than 500 points higher, closing at a record high above 37,000 for the first time. The Dow scoring at both an intraday high today as well as a record close after the Fed signaled a pivot to rate cuts was likely sometime in the new year. The Dow closing at 512 points, selling at 37,090. First time the Dow has moved above 37,000 intraday, so that was noteworthy, and traded as high as 37,095. Looks like the Dow has been, including today's record high close, it's been 531 trading days since the Dow's last 1,000-point milestone, the longest time between milestones since 14,000 to 15,000. Of course, we were on the air back then, so first record high close in about a year and a half. Today, the Fed decided to keep the rates unchanged. The benchmark short-term rate will remain at a 22-year high, right where it's been for a while now, while the Fed it looks like penciled in 3 rate cuts in 2024, according to the Fed's revised dot plot forecast. And then we heard from Fed Chairman Jerome Powell today, who said the Fed was very focused on not making the mistake of keeping rates restrictive for too long. His comments propelled all 3 of the major averages up at least 1% on the day. Extended coverage tonight on the record high for the Dow with John NAJARIAN. Dr. J, as he's known on the financial networks, co-founder of Market Rebellion. Also this hour, I'll be speaking live with Paul DIETRICH, Chief Investment Strategist at LA-based B. Riley Wealth Management. We are watching what's happening with China. The new report claims China has been initiating more cyber attacks and has a greater plan to cripple the U.S. through hacking. A report in the Washington Post reveals alleged state-sponsored Chinese hackers might have breached more than 24 systems over the past year alone. I'll talk about that, and I'll talk about that tonight with China expert Gordon Chang, who will be joining me live later this hour. But first, let's get right now to John NAJARIAN on the line with us live now. Dr. J on the major financial networks, co-founder of Market Rebellion. He's got the laser eyes on, too, watching the cryptos hit new highs for the year recently. And John NAJARIAN, great to have you with us here this evening.
Great to be with you as always, Frank, especially on a record setter like this.
That's right. My great mentor, Paul Kangas, I used to have the honor of filling in for him on the Nightly Business Report, would probably say something like, spurred largely by John NAJARIAN appearing on this program for the last 3 weeks. Stocks closed at a record high. Anything he said was entirely plausible, very authoritative. But thank you so much for joining us and following this very nice, now record-shattering rally for the past several weeks. John, give us your view of what just happened here.
Well, Wall Street had been predicting that we would see cuts of about 75 to 80 basis points out of the Fed. And they do that, as you know, Frank, through participation in the 10-year bond. The 10-year bond yield had fallen from just over 5% to about 4.2%. That's that 80 basis points we're talking about. And I was a bit of a doubting Thomas, quite frankly, that they were right. I thought they would probably eventually be right, but I thought that perhaps the Fed would stay to its guns and say the job isn't done yet and there's still more work to do, all those sorts of things that Jerome Powell has said at prior press conferences. But then when they showed us the dot plot, which is basically each of the Fed governors saying where they think rates will be this quarter, next quarter, and so forth, it's predicting exactly what Wall Street had put its money on, and that is 75 basis points of cuts sometime in 2024. Doesn't mean it has to happen, but it certainly means that the Fed has been very transparent and that Wall Street has apparently really embraced the idea of these cuts long before the rest of us.
We've been reminded that Wall Street, the stock market, is forward-looking, forward-thinking, and we certainly learned that lesson during the pandemic when we saw stocks rebound impressively back in those days when things were turning around. And now we're at a record high all of a sudden here for the Dow Jones Industrial Average. And now the debate is how many rate cuts we'll have in the new year. Where do you see this thing go from here?
Well, we've got the next Fed meeting at the end of January. So this was the last time this year that we'll be hearing from them, unless there's, an extraordinary event of some sort. So, and that's not probably in the cards 2 weeks before Christmas. But I think we could start seeing rate cuts as early as February. But I would think, Frank, it would have to be the earliest in my mind would be in the second quarter, which would, of course, be April, May, June, in that time frame. But, wow, it was certainly one that caught the bears hibernating, I guess, because they did not believe that the 10-year bond, which had slipped down here into those 4.20 range, would go any lower. And now I think they have to believe that it will. And as you and I are speaking, it's trading 4.03, which is an extremely low number and still going lower, according to some of the after-hours trade.
On there live with Dr. J. John NAJARIAN. And, of course, you also follow the cryptos. We've been discussing crypto action over the last several weeks where we saw Bitcoin, hit above 44,000. It has pulled back. We're at around just below 43,000 here at the moment. Give us an update on what you're seeing with Bitcoin and the other cryptos you follow.
Well, they certainly have everything from Avalanche to Solana to even FTT that you and I spoke of, several times in the last few weeks. That's the FTX token, Sam Fried's token. And even that one was moving up by as much as 100% in a 24-hour period. It has been just a feeding frenzy for a number of the minor tokens, as well as, of course, the granddaddy, Bitcoin itself. And Scott Melker and I were on his program earlier today, and we were both thinking that it wouldn't be out of the realm, especially if rates are going down like this, to see Bitcoin take a bit of a hit and perhaps trade towards 38,000. It hasn't happened yet, and that was just this morning that we were talking about it. But we are now at 43,000 again. And, obviously a lot of people are getting all bulled up about the potential for this ETF, exchange traded fund, on a spot Bitcoin contract. And I certainly think that would lift the spirits and that particular digital asset pretty quickly.
What about that ETF? There have been discussions about this for some time. BlackRock, right? And now there's an application. One of the last reports I saw, they quietly adjusted their Bitcoin spot exchange traded fund application to allow the big dogs on Wall Street, including Goldman Sachs, have access. So what's the latest on that, and what's the timetable, do you think?
Yeah, I mean, even though Jamie Dimon seems squarely set against it, the biggest banks on Wall Street are lining up, basically setting themselves up to be custodians for the people that would be out there buying these. And then you had that news that Cantor Fitzgerald, Howard Lutnick, the CEO over there, a friend of mine, and he disclosed how bullish he is on Bitcoin, but also that he has $90 billion in treasuries that support that stable coin Tether. And those are being housed over at Cantor Fitz. Not the Tether itself, of course, but the capital behind it that makes that indeed a stable coin. And that's a bigger statement, I think, and probably why the market's lifted in some of the cryptos today as much as anything. Because normally when we see rates going down, it's not necessarily the greatest time for crypto now that they don't have those same yields that they used to get from lending those tokens. A lot of people got in trouble lending those tokens, and that took down a lot of the biggest crypto players like 3AC, Sam Bankman-Fried, Voyager, all those kinds of things. But this is a brave new world now, and those that survived, I'm sure, are going to thrive.
On there live with John NAJARIAN, let me ask you, since you soar with the crypto eagles, what's the latest on crypto analysis? I mean, at the beginning, we were told it goes up because it goes up and goes down because it goes down. Is there a better analysis these days for Bitcoin and the other altcoins out there?
Well, certainly for Bitcoin, the analysis would be the broadening of the acceptance and broadening of the ease, or at least a relaxation and easing of how to get into that particular crypto. A lot of people are still very uncomfortable having to have all these passwords or a hardware wallet, software wallet. Those are the sorts of things, of course, that you would house or hold your Bitcoin or other digital assets. MetaMask has thrived, and a number of others are out there. And I think even though they've made it easier and easier with each iteration that they've brought out, it's nonetheless still difficult for a lot of us. And I think an ETF, something you could just trade in your stock account, makes it incredibly available to a much broader audience. And I think that would be, more than any technicals or anything else, the reason.
You loved Lala Kent on Vanderpump Rules. Now get to know her on Give Them Lala.
I don't know that I would call it respect that I have for Sandoval, but the world hated him. He still went out, performed shows with his head held high. He showed up to the reunion when we all were going after him. Like, he didn't skip a beat. The way he's handling it, if I were in his position, and I said it straight up to the entire audience, thousands of people, I would tell you all to and the room was dead.
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.
But people are embracing it right now.
What caution do you have for consumers out there who are trying to interpret these descriptions of these altcoins, especially when you go on to like Coinbase or whatever, and you see these descriptions, these prospectus, I guess, right? And trying to figure out the use case of these things and what they're actually used for. What's your guidance when people try to figure all that out?
Mine has been, and for quite a while, that I really think Bitcoin and Ethereum are the two you really want to be in. And the others, you can have outsized gains, outsized returns by participating in some of these other protocols, some of us call them. But I think the risks are certainly right there, along with the potential for gain. So if you hear that, Solana was up 300% in a 2-week time frame, which it was, you have to understand that things that go up or down that fast can reverse just as quickly. And so for a lot of people, that's a little too much volatility, a little too much risk. Even though they want the 100% or triple-digit sorts of gains, they don't want the risks. So my advice would be Bitcoin and Ethereum, and then selectively, especially if they understand a given protocol, okay, then it's okay to get into it. But don't chase it just because it's hot money.
On there live with John NAJARIAN, remember famously Shiba Inu had that big run-up. Remember the late, great Scott Minerd from Guggenheim. We honor his memory. He departed about a year ago. Untimely departure for Scott Minerd. I remember when he spoke at the one of the Milken Global conferences, he referenced that I think an $8,000 investment in Shiba Inu turned it into billions of dollars early on several years ago. What about Shiba Inu here, Doge, and some of the ones that have had these big gains in the past? Will lightning strike again?
I'm sure it will. But the problem is that there are over 20,000 of these altcoins, as you and I call them, and some people have disparaging names for them that go way beyond alternative. But I think overall, again, it's buyer beware. There are so many people that are pushing coins that you really don't understand the protocol. You probably shouldn't trade it. Some of them are going to survive, but the mass, I would say the large percentage of them probably will not survive. That doesn't mean there couldn't be thousands of them, but when you're talking 25,000, 30,000 altcoins out there, it just dwarfs the number of stocks. And I defy most of us to be able to tell me what all of these 7,600 stocks in the United States do, let alone 20-some-odd thousand, 30,000 altcoins.
On the Air Live with John NAJARIAN, you follow the blockchain as well as the gold chain too, right, John? Gold, by the way, back above 2,000 here, up about $50 now to 2,049. Do you touch gold at all? And what about this move in gold recently to a recent all-time high?
I do. Gold and silver have been part of my portfolio for years, and so it's a relatively percentage-wise small percentage. It's probably under 5% between both of those precious metals, and I don't have any palladium or platinum or anything else. But gold and silver I do have. It's one of the appeals of those digital assets is you don't have to have a safe. You don't have to have a large vault somewhere to store a significant amount of wealth. It could be as simple as on a jump drive. But again, there's passwords and all the rest. But I guess when you have a safe, you also have the combinations that you have to remember and so forth. But those combinations don't usually string as long as the passwords and the rest for trading cryptos. So I think that's, again, back to where we started, why you're going to see such mass adoption of these protocols once Bitcoin becomes a spot Bitcoin ETF. I think you could probably see 25 or 30% appreciation in just a matter of days.
At this point, John NAJARIAN, as 2023 draws to a close here and we head into the new year, any specific places where you are putting money now and or taking it off the table?
Well, I guess we should all pay attention to things like what went on with Macy's this week. There are some companies that have survived, even though they've really been challenged, especially by theft and so forth, accelerating at the pace that it has. But nonetheless, Macy's, got that, very large bid that caused the stock to jump 21% on Monday. And I think there's a lot of cash that could be committed, especially if rates are back down here at 4%, instead of moving through 5% and perhaps spooking people that they could go significantly higher. So people looking for returns will pool those funds and chase into whether it's private equity or anything else to try to get a better return. And clearly that's going to drive some of these stocks through mergers and acquisitions. And in the case of Macy's this week, it's already started.
Very interesting, and hopefully maybe we can connect with you again next week, John, to keep this rally going. We always appreciate your thorough analysis here and the great coverage on the cryptos, too. Thank you very much for joining us, and thanks for delaying the popping opening of the champagne here with the Dow at an all-time high here today.
Of course. It's my pleasure, and thank you very much. It's great to hear your voice, and hello, and happy whichever night of Hanukkah it is to all your listeners out there in L.A.
Wonderful, John. Happy holidays to you and your family, and thank you very much for joining us live here tonight. John NAJARIAN, Dr. J, as he's known on the Financial Networks, co-founder of Market Rebellion, live with us here tonight on Mottek On Money on 790 KBC. And, of course, we talk to the biggest fans of crypto as well as the harshest critics. And coming up, our coverage continues of the market rally here tonight. Paul DIETRICH, Chief Investment Strategist at LA-based B. Riley Wealth Management, will be joining us live here coming up in the next half hour. Folks, people like you and me have our ear to the ground on all things business. We like to be informed and well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. And even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're hurt in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehabilitation, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. The Fed holds the line on short-term interest rates, keeping their benchmark rates at a 22-year high, setting off a rally today, signaling that we could be in for some rate declines in the new year. Rate cuts coming in the new year. That was the signal we heard today from Fed Chairman Jerome Powell, who said the Fed was very focused on not making the mistake of keeping rates restrictive for too long. His comments repelling all three of the major averages higher today, including the Dow, which wowed up more than 500 points, closing up 512 to 37,090. Yep, you heard me. The Dow above 37,000 for the first time at the close and first time ever up above 37,000 intraday. The S&P 500 up 63 points at 4,707. And the NASDAQ gained 200 at 14,734. And the yield in the 10-year note is eased to 3.99%. That's the one that was above 5% not too long ago, which impacted the fixed-rate mortgage rates. They were up at 23-year highs, but have since come down. Bitcoin moving lower by about 200 now at 42,809. Ethereum down 2 at 2,259, and Doge at 10 cents. Extended coverage of the markets coming up here shortly. Mottek On Money continues here in 790 KABC. It's a celebration on Wall Street, a well-fed rally sending stocks higher, leading to a record-shattering day for the stock market, with the Dow ending up more than 500 points, closing at a record high above 37,000 for the very first time. Our extended coverage continues now with Paul Dietrich, Chief Investment Strategist at LA-based B. Riley Wealth Management. Paul, thank you very much for joining us. I know you've been in tremendous demand speaking at all these business conferences lately, and with your latest commentary out. Thank you very much for taking the call here tonight. It's great to have you with us.
I appreciate it.
Paul, give us your reaction to this rally here. It looks like we've climbed this wall of worry here in the Fed statement today, holding the line on short-term rates, and the Fed chair's comments signaling perhaps we'll see some rate cuts in the year ahead. Give us your reaction to the big news here.
Well, that's true. Inflation is slowing because the economy is slowing, and we will probably have, according to the Federal Reserve, 325 basis points, quarter of a point decline sometime next year, and that was good. The problem is the stock market, as certainly in the last month or so, has just become wildly overvalued by almost any measurement that you can find. And if you look at, if you just look at a chart, go to any financial website and put in a 50-day moving average and a 200-day moving average, the market is now so far above those median, levels. I haven't seen anything. In fact, it's higher right now than it was right before the stock market crashed 49% in the dot-com bubble back in 2000 to 2002, that recession. And people are buying just based on momentum and emotions, not on any technicals, any fundamentals. They're just buying because everyone is buying. And we've seen that right before the last recession.
Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Joe talks with Stacking Deeds co-host Crystal Hammond.
I've always been a fan of nosy neighbors. I want nosy neighbors. They can tell you what's going on 10 times faster than you would know.
Again, what's she talking about, Doug?
Really?
We're repairing neighborhoods, but then we're into nosy neighbors, and I built a career off of that.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.
In 2008-9, where people were so excited about mortgage-backed securities and what that was doing for the economy. It was pumping in so much money. And also in the dot-com recession, people were, anything with a .com on the name, was just flying high. And the thing that worries me the most is that you always see, 2 months ago, the end of October, the Dow was basically slightly negative, and the S&P 500 was just up a few points. And what we've seen in the last 2 months, and certainly today, is this explosive growth in the stock market. And you usually only see those right before a recession. We saw it in the dot-com bubble right before the markets crashed 49%. We saw it right before 2008 and 2009 when the markets crashed 57%. You tend to see these emotional, explosive upward movements in the markets right before a crash. And that's what I think is happening. There's no fundamentals whatsoever. And people are excited about, artificial intelligence, but basically, most artificial intelligence that Google has and Siri and Alexa and OpenAI's ChatGPT, these things are largely given away for free. There are no earnings. With OpenAI and the ChatGPT, they just announced their earnings last year, and they made $45,000. That was what they grossed out of for the nonprofit that owns OpenAI. People are giving it away for free. It's going to be. I think it's going to be very successful in the future, but for the next year or two, there aren't going to be any profits. And at some point, sanity is going to come back to the stock market, and people are going to start looking at fundamentals and saying, we just can't buy stocks with a price-earnings ratios of over 120 times. It just makes no sense.
On the Air Live with Paul Dietrich, Chief Investment Strategist at LA-based B. Riley Wealth Management. And Paul, I see here your latest commentary is headlined, the stock market is overvalued and disconnected. All year long, we were expecting a recession. In fact, some of the financial commentators early this year said a recession was absolutely inevitable this year, and I've been waiting for this recession. Will it happen next year? And you have a timetable thought out here on what it's going to look like in 2024.
Yeah, I think most economists believe that in the first 6 months, till summertime, that we will have a recession. You're starting to look at all the fundamentals of the market, and unemployment is going up. Job growth is really slowing. And we're seeing, even though we had a good Cyber Monday and Black Friday, we're now really seeing a slowdown in consumer spending during this Christmas holiday season. And it's because people, they had a lot of savings because of COVID. They went through all of that, and they kept spending, basically incurring credit card debt. And now what we're seeing, and you're seeing this in all the reports that are coming out, is that people are hitting up against their credit card limits. And we're seeing Amazon and Walmart and Target and all the big stores are hiring fewer people than they did last Christmas season and expecting fewer sales. And, consumer spending is 70% of the economy. And I think there was so much money pumped into the economy because of the stimulus, the $6 trillion that we spent in COVID and stimulus and infrastructure stimulus, and all that was going into people's savings. And now that's all gone, and according to the Federal Reserve, and now people are just running up historic credit card debt over $1 trillion a couple months ago when it hit that, which is a record high. And now they're hitting up against their limits. It's, if 70% of the U.S. economy, which is consumer spending, starts really going down and unemployment starts going up, that's the definition of a recession.
That's a very important point, and it should be noted that while Wall Street cheered, consumers still struggling with the interest rates at a 22-year high, and in fact, credit card interest rates at an all-time high. Curiously, you were talking about recession. Get a load of this, and this is something that I mentioned on the program last night. Hasbro, the toy maker, said it will cut another 900 jobs globally nearly a year after the toy maker announced it would reduce 15% of its workforce and weaker sales. I don't ever recall a toy company cutting back on its workforce before Christmas. Santa's helpers.
I have not either. And it shows you, and it's the same thing with these big stores like Walmart and Target and everything else. They're just being very, very careful with their, that they don't have too many people. And they tell you flat out on their earnings calls that they're looking for a weaker Christmas season. And I think after people start hitting their credit card limits and after Christmas, you're going to see a severe decline in consumer spending. And I think the reason why we didn't see a recession earlier was just all that stimulus money, which people have now spent, really kind of pushed it off a bit.
All right, Paul. Well, thank you very much for taking the call here tonight for our extended coverage on what's happening here, and hope to speak with you again very soon. We wish you and everyone there all the best this holiday season. Paul DIETRICH, Chief Investment Strategist at Los Angeles-based B. Riley Wealth Management. Paul, it's always a pleasure to have you with us, and hope to talk to you again very soon.
Thank you for having me.
Thank you very much. Mottek On Money continues here in 790 KABC. Good evening. New report claims China has been initiating more cyber attacks and has a greater plan to cripple the U.S. through cyber hacking. A report in the Washington Post, quite extensive, by the way, reveals alleged state-sponsored Chinese hackers might have breached more than 24 systems over the past year alone. The experts believe this could be part of China's long game to distract or perhaps worse, infect American commerce and infrastructure if a conflict erupts over Taiwan. Joining us live now is China expert Gordon Chang, author of The Coming Collapse of China, and also on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call here. What's your reaction to this Washington Post report headline, China's cyber army is invading critical U.S. services?
Well, China has been doing this for decades, Frank. In the beginning, China was primarily doing this for data theft and espionage purposes. But over the last decade or so, they have switched their focus and are also looking to disrupt critical infrastructure. So, for instance, they have gotten into water utilities, pipelines, a grid in Texas, and other things. And some people even say that they had caused blackouts in the U.S., although there is some dispute about that. But the point is, China clearly wants to take down U.S. infrastructure if it feels it's in its interest to do so.
It is to be noted, according to the report, it says among the victims, as you mentioned, a water utility in Hawaii, also a major West Coast port, which I don't think they specified which one, at least one oil and gas pipeline. So we're watching what's happening here on the West Coast.
Yes, and also you have to remember, this is not just China. China works with Russia and Iran. They cooperate. They swap all sorts of technology. And Iran actually has been hitting U.S. hospitals and water facilities. So, for instance, it took down the water facility in Aliquippa, Pennsylvania on November 25th. Now, fortunately, workers were able to switch to manual systems, but the Iranians have been very dedicated at this, and we know that they all work in connection with each other.
And a lot of attention on Hawaii, according to the report, which is home to the U.S. Pacific Fleet and at least one port, as well as logistics centers, suggesting, according to the report, the Chinese military wants the ability to complicate U.S. efforts to ship troops and equipment to the region if a conflict breaks out over Taiwan. And on that point, where do we stand with Taiwan?
Well, right now, China, for the most part, is quiet. And the reason is that Taiwan has its presidential and legislative elections on January 13th. And I think that Beijing has realized that military pressure right now, or at least more military pressure, would be counterproductive. So China has been laying off that and has been actually intensifying its propaganda war against the governing party. But right now, essentially China has its belligerent activities are focused on the Philippines. And there are some very dangerous activities that Beijing has been engaging in at Second Thomas and Scarborough Shoals, as well as Whitsun Reef.
Tell us more about that, those latest incidents.
Well, on Sunday, for instance, China rammed a Philippine vessel, and that is very close to an act of war, if it isn't one. And also over the weekend, the Chinese have been using water cannons against Philippine boats, causing damages. This has been continual, but clearly it's ramped up. And the thing that's most dangerous about this is that the U.S. has been issuing warnings, both written and oral, that it's willing to use force against China to discharge our obligations pursuant to our 1951 Mutual Defense Treaty with Manila. But China keeps on ignoring those warnings, which means that deterrence has broken down.
On the Air Live with Gordon Chang, a China expert. And what about China and its role in the Middle East, given the ongoing Israel-Hamas war at the moment? Give us an update on China's role and what's happening there.
The most important thing is that China's purchases of Iranian oil are way up. If you look at the first 9 months of this year, they were up 60% over what they were in 2017. 2017 is relevant because it was the last year before the Trump administration reimposed sanctions on the purchase of Iranian oil. So clearly, China's been financing these attacks. It's been supplying weapons to all three of Iran's militants, Hezbollah, Hamas, and the Houthi militia, especially the Houthis. And, of course, China's been providing diplomatic and propaganda support, which has been relentless. So China is pretty much backing the attacks on Israel, just as it's backing Russia's war effort in Ukraine.
And we're also watching the Chinese economy closely, which appears to be slowing at this point. Any updates on what's happening there?
Well, we got price data this week which showed that China is in deflation. The consumer price index was down 0.5% year on year. But what was really stunning is the producer price index is now down 14 straight months, which is, I guess, no news that it went from 13 to 14 months. But the PPI fell a stunning 3.0% year on year. And this shows that China is mired in deflation. And I think it's going to be very difficult for China to get itself out of this because it's not willing to do those things that are necessary to stimulate consumer spending.
Gordon Chang, China expert, authored The Coming Collapse of China and the Great U.S.-China Tech War, and on Twitter at Gordon G. Chang. Gordon Chang, thank you very much for taking the time to speak with us here. We wish you and everyone there a wonderful holiday season and hope to speak with you again very soon.
Thank you so much, Frank, and Merry Christmas, Happy New Year.
Likewise, Gordon. Thank you very, very much. Coming up next, it's the 790 KBC News Blitz with our legal eagle, Royal Oaks. I'll be back again tomorrow evening in the 5 o'clock hour. Mottek On Money on 790 KBC.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get inside of my father, John Glover. We watch talk film, and most of these episodes I never saw.
I didn't watch the show.
You never once saw yourself on Smallville?
In the beginning, I used to look at myself all the time and love to. And then as I get older, I stopped.
Why is that?
I don't know. Maybe because I'm older.
I was going to talk to you about that because you're 79?
Yeah.
How old do you feel?
11.
Inside of You with Michael Rosenbaum. Wherever you listen.